Welcome back to Investing Talk Podcast.
Today we're looking at First Majestic Silver.
As usual, before we start, subscribe, like, and comment to this video to support the show. And if there's a specific company you want us to look into, leave it in the comments below.
So let's get into the analysis. I think the place to start here is what's really an incredible revenue inflection point.
It really is. This isn't just a gradual improvement. They've executed a pivot that's put them at the very front of a multi-year expansion cycle.
Exactly. It's all about scale. And you can see it plain as day in the quarterly results. I mean, the numbers are just, they're what really grab the market's attention.
Yeah, and when you say grab attention, we're talking about nearly doubling their top line. The reports from 2025 were frankly stunning. Q2 revenue was, $264.2 million?
A 94% jump year over year. A massive number.
And it wasn't a fluke.
No, not at all. Q3 came right after with another record, $285.1 million. That's about a 95% year-over-year growth. So you're looking at consecutive record quarters. The expansion is real.
And for investors who are specifically looking for silver exposure, this company gives them, huge leverage to the price.
Right, what analysts call high beta. And that's because over half their revenue, I think it was 54% in Q2, comes directly from silver sales. It's not just byproducts.
So how did they do it? How do you almost double revenue in a year?
Well, it was a perfect storm, really. You had two drivers accelerating at the exact same time: production volume and price.
Okay, let's start with volume then.
The production just soared. They hit 7.9 million silver equivalent ounces in Q2.
And for anyone listening, that silver equivalent, or AGQ metric, that's the industry standard, right? It bundles all their metals, gold, zinc, lead into one silver-based measure.
Exactly. It gives you a true sense of their operational scale. And that 7.9 million figure, that was a 48% jump from the year before. Then in Q3, they hit a record 3.9 million ounces of just pure silver.
A 96% increase.
Astonishing, yeah. It's 100% proof that their investments in these big new assets are paying off and paying off quickly.
And then you have the price component on top of that, which just, poured fuel on the fire.
It really sealed the deal.
Yeah.
Their realized price in Q2 was $34.62 per silver equivalent ounce. That's up 24% year over year. So, selling almost twice as much metal at a much higher price. That's the dream scenario.
Which leads to the bottom line. How did that translate into actual profit?
This is maybe the most compelling part. The company swung from, being a loss-making enterprise to a really profitable growth story. They went from a net loss of $48.3 million in Q2 of 2024
To what?
to net earnings of $56.6 million in Q2 of 2025.
Wow. That's a huge turnaround. It shows the operating leverage they have now is massive.
It is. And we saw their EBITDA hit a record $119.9 million in Q2. I mean, for the listener, EBITDA is a pretty clean measure of core profitability from the mines themselves. Seeing that go up more than 5 times in a year, that's just foundational.
And this wasn't an accident. Management has been making some very deliberate moves.
Incredibly disciplined. You saw them sell off some lower return assets like the Del Toro silver mine for, I think, up to $60 million.
So they're pruning the portfolio, selling off the slower assets to reinvest that capital into the Ferrari of their portfolio, which is this high-grade Los Gatos complex.
That's the core of the strategy. And it leads us right into operational execution. I mean, an acquisition like that is one thing, but making it work is another.
Right. And Los Gatos is the key here. It's the pivotal asset.
And management is saying the integration is nearly complete, which is a huge milestone. They're already targeting a throughput increase to 4,000 tons per day in the second half of 2026. So there's a clear runway for even more volume growth.
And it's interesting because it's not just the new toy that's working. Their established mines are still performing.
That's a great point. San Dimas, one of their core assets for a long time, actually saw a 9% increase in silver production in Q2. That tells you the operational know-how is there across the entire portfolio. It's not just a one-hit wonder.
Usually when you see this kind of massive expansion and integration, costs go through the roof. But they seem to have kept a lid on it.
They've shown remarkable control. Q2 cash costs were actually a little bit better year over year, around $15.08 per silver equivalent ounce.
Which is incredible given the circumstances.
It is, and it suggests that their future margins could be immense. Management is already guiding for significant synergies and cost reductions once Los Gatos is fully integrated. So the strong margins we're seeing now might just be the beginning.
So if costs are steady now, what does that operating leverage do for their balance sheet, for their financial flexibility?
It creates a ton of resilience. Their liquidity is robust. It had a record $583.8 million in Q2 25. That's a huge cash cushion in a volatile business like mining.
And the free cash flow. That's where the leverage gets really exciting.
Absolutely. The cash they generate after all expenses and investments. Q2 free cash flow was a record $77.9 million. Then in Q3, it improved again to almost $99 million.
Which is roughly triple the year before.
Exactly. And that kind of cash generation solves a lot of problems. They used that strength to raise $350 million with a convertible notes offering, which gives them growth capital without having to, dilute shareholders too much right now.
They're paying a dividend.
They are paying a quarterly dividend supported by these results. When management is funding growth and returning cash to shareholders, it's a huge signal. It tells you they believe these cash flows are sustainable.
It's the ultimate vote of confidence. So
Yeah.
how's the market reacting to all this?
The technical momentum has been just incredible. The stock is a sector leader, up well over 200% over the past year.
Something like 205 to 217%, depending on the day. And it recently hit a 52-week high of $17.92 on really strong volume.
So the charts and the fundamentals are perfectly aligned, and that's attracting the big money. Institutional ownership is already around 27%, which is significant, but there's still plenty of room for more funds to jump in.
The sentiment feels decidedly bullish. Any small pullback, 4 or 5%, seems to get bought up immediately.
Right. The market sees those as buy-the-dip opportunities, which tells you the consensus believes this growth story has legs.
And you're hearing a lot of M&A chatter now.
We are.
Yeah.
Which is speculative, of course, but it kind of acts as a valuation floor. With their balance sheet and performance, they could be an acquirer or, a very attractive target for a major.
You can see that anticipation in the options market too, can't you? There's been unusually high call volume.
A ton of it. It suggests traders are positioning for another leg up, maybe even hedging against that M&A potential.
Okay, so it's a powerful picture. Operations are firing, the financials are incredible, the market loves it, but it is a silver producer.
And that high beta is a double-edged sword. We have to talk about the risks. The counterpoint is crucial.
And the biggest risk is the one they can't control, the silver price itself. It is notoriously volatile.
Extremely. We saw it recently, didn't we? After that massive rally that took silver to an all-time high of over $83 an ounce in late 2025, we saw a really sharp intraday drop.
Yeah, a huge fall.
And some analysts are cautioning that those peak prices might have been, unsustainable.
Because at those levels, demand starts to suffer.
Yeah.
Industrial demand, jewelry demand, it can weaken significantly.
Precisely. And then there's the longer-term supply picture. Various analyses suggest that the big supply deficit we saw in 2025, about 230 million ounces, is projected to shrink a lot.
Shrink to what?
Down to around 59 million ounces by 2027.
And why is that?
It's a mix of rising global mine output and, more importantly, a big increase in recycling spurred by these high prices. So, the fundamental supply-demand balance might become less supportive over the next couple of years. If the price stalls, a high beta stock feels it most.
Okay, that's the macro risk. What about company-specific risks? They did have a miss in Q3.
They did. An earnings miss, EPS of 0.07 cents versus a 9.11 cent consensus. And a revenue miss against some of the higher estimates.
So what does that tell you?
It highlights the challenge. Integrating a massive asset like Los Gatos while meeting sky-high market expectations. It's not easy. There are always going to be bumps in the road.
But the counterargument is that even with that miss, revenue still grew 95% year over year.
Which is the key. Management is confident those synergies will come through as the integration finishes up. That's when you'll see the real operating leverage kick in. Their strong balance sheet gives them the cushion to absorb these kinds of transient issues without derailing the whole growth story.
So if you were to sum it all up, what's the core investment thesis here for the listener?
Look, this company offers high-torque exposure to silver. It's backed by a proven operational transformation, record production, and rapidly expanding free cash flow. They've really achieved escape velocity from the mid-tier, and they're just now starting to see the margin benefits of that scale.
So what are the key catalysts we should be watching for over the next, say, 3 to 6 months?
The Q4 and full year 2025 results are absolutely pivotal. The market needs to see that full year revenue cross that $1 billion mark. That solidifies everything.
We should also be looking for guidance updates, right? On hitting that 4,000 tons per day target at Los Gatos and any new exploration results that could boost their asset value.
And of course, the macro picture. You need that to stay supportive. Geopolitical tension driving safe haven demand, potential interest rate cuts, and robust industrial demand from solar and EVs, all of that helps keep the physical silver market tight. It's a tailwind for a primary producer like this.
All right, so here's a final thought for you to chew on. Given this massive stock performance and the fact that its key asset, Los Gatos, is still in the process of integrating and ramping up over the next year, what does a fully optimized billion-dollar-plus revenue silver leader even look like if the commodity price just holds where it's been recently?
That's the billion-dollar question, isn't it? What is the full potential here? It's something to really think about.
Make sure you hit that subscribe button to keep up with our analysis, and we'll catch you next time on Investing Talk Podcast.